have to hear what Dr. Doom is saying about the U.S. economy. It should be eye-opening and quite possibly have you taking a double take. I know I did. We need to talk about housing starts crashing. We can talk about home builders survey and, of course, Jerome Powell resetting housing. First and foremost, folks, thank you for all the nice notes yesterday. I still do not feel great, but we're still going to do the show because that's what we do. Even when we feel bad, we do the show. So this is the daily financial news for Tuesday, September 19th. Folks, let's just jump into it right away. Remember at Jackson Hole, what was that, like 13 months ago? Maybe it was the press conference after Jackson Hole where Jerome Powell uttered the words, basically saying, I am going to reset the housing market. Remember that? And lots of folks were talking about, yay, the price crash is coming. And of course, we talked about, no. He's going to go in and he's going to jack up rates. He is going to cause an affordability problem. And what will happen is transactions will crash immediately. We are seeing right now the second leg of that, and I think the numbers will be reported on Thursday, showing that we took a step down. The low water mark for existing home sales to date is 4.02 million. I think we go lower than that in August. I think we go lower than that in September. The longer that rates are over 7%, which I believe we are in week 5 or quite possibly week 6, the slower the market is going to get. Because again, we are also in the winter months where it always gets slower. So if you are looking in your buy box, I think what you're going to start to see is listings and days on market rise. You're certainly going to see inventory levels rise above the median because, again, nobody else tells you this. People talk about all these inventory numbers and rising, but for most of you, that stuff is above the median or it's junk that first-time home buyers can't buy. So again, the housing market has been reset. It has been reset. It just wasn't what some folks were hoping or calling for. We have set a new floor that I think will last years. Years, folks. If you haven't gotten the 53-year spreadsheet, you need to do it. It's free. It's on my website, onerentalatatime.com. There are endless economic metrics in there. Go back to 1978 and ask yourself, how long did it take us to get back to transaction levels of 1978? The answer, I believe, is 18 years. Now, I am not calling the housing market to be broken for 18 years, but darn it, 9 years. 9 years is on the table. 5 years is on the table. This is not going to heal quickly. It's just not. Excuse me. So again, Powell has reset the housing market. Check. He did what he wanted. He brought supply demand down. We brought demand down and supply down to a new low level. Let's talk about the home builder survey. Home builder survey basically is now negative, right? Again, all of these numbers, all of these surveys have these wild ass numbers that you don't need to care about. The number 50 is important in this survey. 50 is kind of the watermark between expansion and contraction. The home builder survey has been above 50 for quite some time now. Not anymore. It is now below 50, and it's quite below 50. It's at 45. Most importantly, buyer traffic is a 30. What does that mean? It means rates matter. Nobody's looking for a new home. Even though home builders can do rate buy downs to 5.5, sometimes even sub 5. If you can't get people to come in the door, you can't sell the home. So again, home builders are still doing well. They didn't expand so much. But again, you got to watch homebuyer traffic. My guess, assumption, prediction, wild, crazy idea is once rates get below 7, buyer demand will pick up. We'll see. We'll see. Will rates get below 7 in November? We'll see. We need to feel, the Fed just needs to be done raising. The market needs to have confidence in that. and then you will see the compression in what to date is a rather large delta of about 300 basis points. It should be about 170 to 180. So we got a lot of margin to come in once the banks feel the Fed is done. Other things of note is 32% of builders, so 1 in 3, cut prices in August. I'm sorry, in August, which is up 25% from July. So again, price cuts are coming in. So it's not only rate buy downs, not only closing cost credits, not only credits for upgrades, but now they're also cutting price at a higher rate. Again, my experience buying a brand new 7-figure home, what was that? 3 months ago, 2 months ago, 3 months ago? We got a price cut, we got free upgrades, we got 0 lot premium, we got closing costs, and we got a rate buy down. You can negotiate pretty hard, right? If you're out there shopping. Again, if you're shopping now, negotiate hard. Negotiate hard. Dr. Doom, Nouriel Roubini. He has been Dr. Doom and owned that moniker for 2 decades. 2 decades. Dr. Doom has been one of the consistently, he's on Mount Rushmore of doom. There's an article, I think it was on Bloomberg. Did I write it down? Let me see. I did not write it down, but I believe it was on Bloomberg. Might have been Market Watch. Dr. Doom, Nouriel Roubini, is actually, for him, optimistic. Yes, Dr. Doom is optimistic. That scares me. When even Dr. Doom is coming around going, you know what? It's not that bad here. That causes me to have some concern. So what are some of the things he said? He actually thinks there are 2 options, because about 6 months ago he was like, it's over, the world's ending, catastrophe's coming, blah, 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 blah. It's typical Dr. Doom stuff. Just recently he says, you know what? I think we might have a soft landing, or maybe a bumpy landing, which he called a short and shallow recession. Folks, this is Dr. Doom saying this. Dr. Doom is like, hey, you know what? They might just pull it off. They might get lucky and pull off a soft landing. And if they don't, the next most likely outcome is a bumpy, short, and shallow recession. I will remind you one more time. That is Dr. Doom saying that. Crazy. So in the end, Dr. Doom is still worried about a short and shallow recession. He is still concerned. But that is a mile away from a Great Depression 2.0 that he was spouting off 6, 9, 12 months ago. That is, I can't say it any other way. That gave me pause. Like when everybody goes to one side of the ship, even Dr. Doom, I'm like, wow, what are we missing? What's on the other side? This can't be good. This can't be good. Dr. Doom and I agree? What the heck is going on? I don't know. I thought it was funny. Hopefully you do as well. Jason Derulo. Yes, folks, Jason Derulo. I listened to that kind of music all of the, certainly growing up. Not so much anymore, but that was definitely my jam back in the day. I actually heard him interviewed by Ed Milet while I was running. Yes, I tried to run yesterday to get rid of this, whatever I'm dealing with. I'm an idiot. I ran 5 miles or whatever it was. Jason Derulo said, success is never owned. It is rented. Success is never owned. It is rented. Folks, we come back every day to do the 5 days a week live to do the daily financial news because that's my commitment to you. We make up Friday and Saturday at a later date so we keep our streak going of 4 or 5 years of every day giving you the financial news. I ask you to look at your market, your buy box for 20 minutes a day. Success is never owned. It is rented. It is rented. Think about that. Think about that. Housing starts. Housing starts are crashing. Get ready for all the negative headlines and all the crazy YouTube videos. What is going on? Folks, Housing starts crashed 11.3%. 2 units and above crashed 41.6%. Oh no, the world is ending. Folks, rates matter. Also, are we not aware of the supply-demand curve going on in multifamily? There is a lot of units coming online. Also, remember what Lance Lambert and I talked about from Fortune like 6 months ago. 6 months ago, I told you this was coming. The commercial banks, which are the lion's share of the lending for builders, unless you're the top 5 public, is done. Of course, this needs to stop. Multifamily construction, 2 units and above, crashed 41%, and that is a good thing. It's supply and demand, right? We have all of this supply coming online, so yes, you should stop building that. Also, costs are up, rates are up, construction loans, impossible to get. This is the system clearing and cleaning itself up slowly but surely. So, 2 units and above crashed 41%. What about single-family homes? Great question. Down 2.4%, negative 2.4%. Again, if you are the big builders, you're doing just fine. If you are that next tier down in a private builder, you are struggling. You can't get financing. You are doing smaller projects, so you can use operational cash flow. The lending market is off. It's done. So of course, construction will be down, which is, oh, by the way, not a great thing. I am fine with multifamily crashing 41%. Great, makes perfect business sense. What do you and I know with certainty we need today? We need cheap, inexpensive, first-time homes. And the fact that single-family homes are down 2.4%, now that's in total, does not make me feel good. Now maybe that's all luxury stuff and people are building small. Great, awesome. I don't think that's what's going on. But it would be great if it was, but hey, we live in the real world, not fantasy land. So again, housing starts down 11%. 2 units and above crashed 41.6%. And again, folks, crash to me is 20% and above. So 41% clearly a crash. Sorry. So stay out of the market. So I have a private Facebook group called called One Rental at a Time Works. It's where 2,000 plus students of mine interact with each other, ask questions, post wins, all of that. There was a question yesterday saying, basically, Michael watches daily financial news. Is he telling us to stay out of the market? I want to address that head on with all of you. Let me tell you this right now. I will never tell you to stay out of the market. Never. I have been looking at my market for 22 years every single day. In every market, there is always, you should just believe at your core, there is a great deal hiding. Second, I am not telling you to buy. I am telling you to do the work. If you do the work, if you are disciplined, you will learn what an average deal is. And if your average deal is, say, 5% cash on cash or yield, and because you found a motivated seller that's willing to take a discount, carry a note, whatever it is, and you can get a 10% yield, I don't know about you, but I would consider doing that deal. They're not easy. They're not everywhere. They often take follow-up. Learn from the folks on this channel. Beth Traverso, I think it was last week, told us about an opportunity that she worked on, wrote disrespectful offers, followed up, blah, blah, blah. She got it for about $150K, I think, under list price, or maybe $100K under list price. She added another 250 grand in value add, and now she's sitting on 800 grand in equity. Again, I am trying to motivate you to control your future. Only you can make you rich. You, yeah, you, right there, right there. Yeah, I got it. You have to own your stuff. Do the work, look every day, track it, nothing changed, move on. But never, ever, ever stop looking. If you stop looking for a week, you will start to not understand the pulse of the market. And for folks in my boot camp, remember, we're meeting Saturday at 8 a.m. Zoom invite went out yesterday or the day before. We will meet at 8 a.m., go to 10 o'clock, talk about a buy box, all of those great things. If you're not in the buy or not in the boot camp, you can buy the $47 buy box deep dive down below on my website, all that good stuff. Excuse me. So, lastly, Tesla, Ford, and GM. So, yesterday when I was talking with Taylor from Life Goal Investments, he shared with me that GM and Ford auto workers already make $20 more than Tesla auto workers, right? Ford and GM unionized, Tesla not unionized. Just matter of fact. What appears to be happening, again, I didn't believe that. I didn't know it. I'm not a auto guy, but I can read. So I went and researched that. And indeed, as of right now, GM and Ford UAW workers make about $20 more than Tesla workers. What is happening at GM and Ford is that could go up. I want to make sure I get this right. That could double. That could double. Now, what does that mean? Okay, great. What does that mean? Well, it means a couple of things. One, it could mean that GM and Ford have to sacrifice margin to compete on price. That is an option. That is an option, right? If Tesla's margins are 12%, Ford and GM or Legacy Chrysler, whatever that is, Stellus or whatever the heck the other name is, they could compete on margin and make less per car. That is an option. Two, Tesla, right? I mean, let's just play the chessboard for a minute. Let's just play it. Tesla, the UAW thing goes through 30 days, 45 days from now. They get a 30% raise or 28% or whatever they're going to get. They're going to get something. What Tesla could do is Tesla could come in and take their margin, which I don't know what it is, it's called 11%. They could take it down to 5% and significantly impair GM and Ford. Because what are they going to do? Lose money for every car they sell? Next, will GM and Ford be forced to raise prices? Because at some level, your margin, if it gets too low, you can't cover operations. So there's a lot of stuff working in the mix where a large portion of the force is unionized, and there's this one over here that is not. It'll be a very interesting study in business execution over the next 3 to 6 months. So very, very cool. So folks, at the end of the day, we are sold out once again for the VIP tickets to our One Rental at a Time Mastermind Celebration Concert event in Vegas. We have, what is that? About 140 tickets left or so. General admission, $199. You need to be there. You're going to get to hear from 11 investors focused on helping full-time employees get wealthy. You're going to hear from a couple, Jason and Jen, talk about working together, building an empire. You're going to hear from that ADU guy. Folks, if you did not watch, dude, seriously, yesterday at 5 o'clock, I posted a video with that ADU guy where he walked through a $30,000 ADU. Folks, if you are in a market where it is ADU friendly, California, Washington, some other states, you need to watch that video. I believe doing the ADU route could be the best thing to do today. Certainly in California, certainly in Washington, and certainly in many other states. Even if you are in a state that doesn't do ADUs yet, watch that video. It is the best option today. $30,000 takes a dining room and I forget what he called the other one, a living room, turns it into a 1-bedroom, 1-bath with a loft, and he's going to get like $1,500. 30 grand, 1,500? Are you kidding me? So again, please watch that video. It came out yesterday at 5 o'clock. There is a playlist. I have a playlist called That ADU Guy. Watch that video. Alrighty, folks, you need to be there. That ADU guy is going to be at the event. You need to ask him questions. You need to get ready, rock and roll. $199 plus a concert, plus a celebration, plus entertainment, selfies, book signings. You need to be there. I'll put a link below. But yes, this will sell out. We're about 151 days away from the event. I was hoping we would sell out in a couple weeks. Maybe we can, maybe we can't. We'll see. Folks, take care of yourself. Like, subscribe, comment, become part of the family. Bye.